Welcome back, investment family. For those of you that are new here, my name is Forrest. I invest in stuff and my goal is to get you to do that too. Today we're talking about the bill that was just passed, the Holding Foreign Companies Accountable Act. Really the idea with this bill is for ADRs, or basically you have companies that are hosted in countries like, say, China, which is very pertinent to this videos, and EVs. A lot of the EV companies that are really hot and popular right now are being listed on like the New York Stock Exchange, and it allows investors like us to buy shares of companies like NIO, right? And so the heart of this bill, or really the point of this video, is what happens if those companies get delisted. And with this bill passing, that means that anybody who isn't, or any companies that aren't up to a specific standard or don't pass a specific audit, can and will be delisted. But we're gonna dig into that. First and foremost, what would be really helpful for me is if you could go ahead and hit that subscribe button, hit the like button. That'll help out the YouTube algorithm, and it'll really help me and help me make more videos and really just be more successful on this platform because I do put a lot of time and energy into it. So let's go ahead and jump into this topic. So I'm actually just gonna read this bill exactly as it's written here on congress.gov. If you really wanna just find out what's in these bills, guys, it doesn't take that long. You can look this stuff up yourself. But I'll put this up on the screen now. It says, this bill requires certain issuers of securities to establish that they are not owned or controlled by a foreign government. Specifically, an issuer must make this certification if the Public Company Accounting Oversight Board is unable to audit specified reports because the issuer has retained a foreign public accounting firm not subject to inspection by the board. Furthermore, if the board is unable to inspect the issuer's public accounting firm for 3 consecutive years, the issuer's securities are banned from trade on a national exchange or through other methods. Continuing on, it says, foreign issuers of securities that use such a firm to prepare an audit report must disclose for each non-inspection year the percentage of shares owned by governmental entities where the issuer is incorporated, whether these governmental entities have a controlling financial interest, information related to any board members who are officials of the Chinese Communist Party, and whether the articles of incorporation of the issuer contain any charter of the Chinese Communist Party. So obviously this bill is very geared towards dealing with China. My high-level thoughts on this right out the gate, and I'm going to drill into each one of these bullets specifically, is that the United States depends very heavily on China for trade and commerce, despite what we might see, in the political sphere and the things that are publicly said, and vice versa is true as well, right? We buy their products, which means that China sells us their products. And so it's a mutually beneficial relationship. Obviously, it's tenuous. Like any business relationship, it is constantly being renegotiated, but also in that case, there aren't too many other alternatives, right? So it's in both parties' interest, the United States and China, that we maintain a healthy relationship that remains mutually beneficial. But first, let's actually start to dig into what these points actually mean. So starting at the top here, the Public Company Accounting Oversight Board. Really, this is just an auditing entity. This is a standalone entity whose purpose is to go in and basically just say, hey, are you fudging the numbers? These audits, from what I understand, aren't even that complex, right? They're not that in-depth. The idea, though, is because these companies are not in the United States, we need to be super certain that they're not doing, essentially not defrauding our investors, right? The United States government, our economy as it's set up, really encourages people to participate in the market, right? The barriers to entry for individuals to invest is very low, especially with the advent of apps like Robinhood and all of these things, right? Like I could just go and invest in a company tomorrow. I could throw $5,000 in it, right? And so the benefit to China then is of listing things in our exchanges is now that they can take money from me, somebody who isn't a citizen of their country, not paying their taxes, right? I'm not necessarily directly, part of their system, and they're not a part of ours, all right? So we're basically closing the gap and allowing, really making it possible in this world now where we have global corporations for people to raise money from all over the world, but in this case specifically the United States and on our exchanges. And basically what it says is if you don't pass this audit for 3 years for any number of the reasons listed there, that you'll be delisted. So we saw a big hit to all of the EVs that were based out of China. NIO has tanked down to, I think, $42 now. Let's actually take a look. So So just started recording on my iPad. If we take a look at NEO, we can see, actually, well, let's do a quick glance on my account value, $25,000, in case you're curious. Scrolling down to NEO, we can see that its current price is $42.78, which on the week is down 21%, right? So it's taken quite a beating on this news, and it really was this news that sent it downwards. Now I've loaded up, you can see I have 61.84 shares, and so you might have an inkling of how I feel about it. I actually just basically tripled down on this. I think that NEO is a great company, and I'm going to continue to average down. I'll probably buy some more shares next week, especially if this gets under $40. If it gets under $40, I think it's an even better buy than it is now. But if you're bullish on the long term, honestly, any days is a great time to get in if you're looking at a 5-year horizon, right? Which is really how I think about my long-term investing. Long-term to me means, is this something that I'm comfortable holding, over the next 5 years and certainly over the next 10 years. If there's nothing that could wipe the company out in that time span, that means that its revenues are going to continue to grow at a sustainable rate, and especially a company in their industry, it's going to grow there's going to be exponential growth, more or less, right? So coming in today in the 40s or low 40s, or even say if it was up to $50, and if I expect the price to be in the 1s or the 2s within 5 years, you get where I'm going. It doesn't really matter. There are gains to be made. But let's get back to the point, or really what I was talking about earlier, in that what happens, or the risk, right? So if a company gets delisted, and the reason why these stocks took this hit is because there's this fear of people who don't necessarily understand what this means, or don't understand the process, thinking that that bill being passed means that these companies are going to be delisted today or tomorrow, right? Really, the risk here is in what we're seeing, and we saw it with Candy, is that if we find out that your business isn't real business, or you're defrauding investors, or you're funging your sales numbers, then you're likely to be delisted, right? These companies are essentially being, even though it's a light audit, right? So the audit that they're going through is pretty light. They're being actually held to a pretty high standard, and they're basically saying, hey, if we catch you messing up, even though the audit's pretty light, but if we catch you messing up, we're just going to delist you. You're basically like, you're done. That's it. Which is a pretty fair way to approach it. I think generally, again, the U.S. government is going to work with the Chinese government to make this something that is amicable, right, for both sides. And ultimately, I think this might change from where it is today. But who knows? We'll see. I'm not, in politics. I'm just an investor. But like I said, I'm bullish personally on NEO. Do your own research. But I'm personally buying more. I think it's one of the few decent companies out there. They have products on the road today. They're being bought. Their sales numbers are increasing. The amount of vehicles that they're producing is increasing month over month. Things are looking good. Quick little side note, if you didn't notice, I got a new desk. So I'm in the same spot, new desk. It's a big L desk, pretty cool. I love it. I got a plant here. And overall, this is just a much more comfortable way to film these videos, so hope you like it. All right, so the next points, if we go down here on the list, the next bullet point said, the percentage of shares owned by government entities where the issuer is incorporated. The idea here is really, in the general gist of all of these bullet points, including number 2, whether these governmental entities have a controlling financial interest, is just that we want these companies, right, especially since we're giving them US dollars, right, the dollars of US investors, to not be controlled by the government. Now, we have very different economic systems here in the United States and China, right? We have a freer market, right? I'm not going to say that it's just totally free, because it's not. The government intervenes here constantly, like they did this year, right? There are companies that we know we won't let fail. We won't let airlines go out of business. We won't let automakers go out of business, right? They're essentially subsidized / nationalized companies at this point, but I won't go into that. But the point is, you can start a business. You don't necessarily have to answer to the government. They're not going to have an interest here or anything like that. It's very different in China. Many of the large companies actually do answer to the government directly, and it's much less independent, right? And we're basically saying, hey, that's cool, but for any company where you're collecting our money or using our investors, basically, then one, we're letting you compete in our market space. Right, so if we're going to let you do that, you're going to have to play by some of our rules, at least, right? Again, these companies are started in China, an entirely different society. It's a different economic structure. but we're basically saying you have to play by some of our rules if you want to compete against us and raise money from our investors. The last 2 points here basically say the same thing, right? Information related to any board members who are officials of the Chinese Communist Party, and whether the articles of incorporation contain any charter of the Chinese Communist Party. Right, so they basically just want this business to not have a political agenda related to the Chinese Communist Party. It's not to say that anybody who's running this company might not personally be a huge fan of the Chinese Communist Party. That's not what it's saying at all. Maybe some of the people who work there are, and that's totally okay, right? If you're born in China and like the Chinese government, that's cool for you. And all we're saying is that we just don't want that entanglement at an official way, and probably unofficially, right? Kind of the third bullet there. If somebody is directly, an official or would be using the company, right, to achieve some type of political agenda, that's probably going to be a big no-no, right? But basically, the U.S. government is saying it's totally cool if you want to have an electric car company and produce electric cars and compete against our electric car companies, and help build this competitive pool of companies to do all the things that competition does, right? Pushes prices down for consumers, it increases the rate of innovation, all of the positive side of capitalism, more or less. That's really what they're trying to achieve here. And this is important for a few different reasons, right? If we think about really what we're trying to do here, and I think some people really only look at this as like a "we just don't like them" thing, and that's really not it. One is we have to remain competitive, right? Part of what makes again, if you look at trying to promote those positive factors of capitalism, the lowering prices for consumers and increasing the rate of innovation, that's great. But if you look at at like a more sovereign level, right? There's very little reason for us to go and help somebody or provide a way for money to easily funnel into another entity from which we have a let's just say competitive nature at the sovereign level, right? We're a country and they're a country, and we kind of need to maintain this balance if we just want kind of like peace in the world, right? So there's these two very important things at play. There's like the free market, and then there's just like living our lives and stuff like that. So it's a very complex, very complex topic and set of concerns that honestly we could probably spend days talking about if you watching this and sat down here on the other side of this table and we had a discussion. If you're here in New York and you want to come do that, maybe we can do a video. That'd be cool. But just let me know. Hit me up. Shoot me an email. So tying this in, and I think kind of this will be my last point here. It's pretty important. So thanks for sticking around this far. Is what does this mean for companies like Tesla, right? So Tesla just got approved to sell the Model Y in China, right? So China's doing the same thing. They're basically saying, hey, you're a U.S. company, you can come and, Tesla, by the way, is already selling Teslas in China, but they're trying to basically motivate U.S. companies to come and sell cars there, right? And increase competition there for a number of reasons, right? We can bring in our expertise, our engineers, promote Chinese, new graduates to work at these companies, and it's only going to be beneficial for their economy in terms of human capital, and I'd say like dollars and cents capital, real capital, right? So promoting business is great for them. They're doing the same thing that we're doing here. They want Tesla to actually export vehicles from China to other companies there, which will be great because then they'll get the benefits of the export taxes and things like that, and tariffs essentially. So is this a risk for them? I think it is. I don't see a world where we go and say, hey, none of your companies are going to be listed on our exchange, right? We just cut it. It's not based off of an audit. The US just gets super stingy, and we just say, hey, no, none of that. China, even though it's a completely kind of separate thing because Tesla is essentially building a factory over there, can just go, okay, here's this company that you all like called Tesla. We're just gonna not let them do business here. Right? Now that's not good, like I said, for either party, right? Because they lose the value of having a very profitable company building and exporting cars in China. Like everything else, everything's on the table, right? Which is why you can't have this zero-sum kind of negotiation with someone that you depend on and who depends on you. which is why I think it's very unlikely that we see something like that, right? I think that there would be very bad economic implications if the conversation degraded to that point, especially very quickly, to where we'd see other things start to happen as well. You know, and it really just hurt, you know, Americans, like individuals like us, across every economic standpoint here, and it also hurt Chinese people as well in their economy. So very unlikely to happen, in my opinion. Again, this is my opinion, do your own research. So what am I going to do about it? I think the last part of this video is I'm bullish. I think do your due diligence, make sure that the companies that you invest in or are putting money in, you know, do more due diligence than you would, because of that delisting risk. I would just consider this as a risk. It's not a certainty, right? It would be no different, by the way, than a company in the US if they defrauded investors. Like, there would still be ramifications there as well. Investigations would happen. This is just another layer because these are foreign companies. So it's just something to think about. Definitely not recommending, again, that you have to invest in NEO, but something that I'm doing. And if that changes, I'll let you know. I'll see it on video, but I'll just sell those shares and do it into something else. Nothing is risk-free in investing. The general relationship between risk and reward is, generally speaking, the higher the risk, the higher the reward. The lower the risk and the more certain the return, the lower the return is. It's kind of just investing 101. So do your research. The more personal understanding that you have of an investment, that where you can lower that perceived risk within your own brain, then maybe the risk profile for you, or maybe you might actually be able to assess that the risk profile of something is lower than what everybody agrees it is. And that's really the special sauce. It's basically where you can analyze something and say, hey, everybody's saying this is super risky, but I know some things that really is telling me that it's not as risky as people think. So I'm getting an even, when I look at my risk adjusted return, it's far better than everyone else's, and I can allocate more dollars there. Things like that. That is it for this video. I originally was going to shoot this just talking about Tesla being able to export the Model Y, but then that bill got passed, and these are kind of related. But in any sense, I appreciate you stopping by. Again, go ahead and hit that subscribe button if you don't mind. I'm trying to get to 10,000 subscribers, and you could be the next one. But until next time, Force Night out. I hope there's nothing stupid in the background of this video, because I didn't check the set at all. I just plopped the camera up and started talking.